Every empire claims its currency is unshakable. Every government vows its assurances are eternal. Yet history repeatedly exposes their falsehoods. From the fall of Rome to revolutionary France, from the Confederacy to modern-day Lebanon, people have awakened to find their savings worthless, their wages meaningless, and their futures shattered by systems they believed were unbreakable. Collapse isn't an anomaly, it's the norm. The real question isn't if financial systems will fail, but how you shield yourself when they do. The belief in permanence is the greatest financial trap. We glance at our bank accounts or national currencies and assume they're indestructible. But money isn't a foundation, it's trust, and trust can dissolve in an instant. History is a harsh teacher, littered with lessons, patterns, and warnings about what truly preserves wealth and what crumbles to nothing. Those who survive aren't the ones who trust the most, they're the ones who question first. Consider the Byzantine Empire, the eastern remnant of Rome that endured for a millennium after the West's collapse. Its gold solidus was a beacon of reliability, accepted unquestioningly across Europe, the Middle East, and Asia, a medieval global reserve currency. Yet even they repeated Rome's mistake. Rome had debased its silver denarius into near-worthless tin. Centuries later, the Byzantines diluted their gold, mixing in cheaper metals. At first, the change was subtle. Then trust fractured. The coin that underpinned trade became a fiction, and the Byzantine economy faltered. Survivors weren't those holding imperial promises. They were merchants who hoarded gold or land beyond the empire's grasp. Lesson 1. Governments can't resist debasing their currency, and when they do, true wealth flees to assets they can't manipulate. Not every collapse stems from tampering with coins. Some arise from sudden, catastrophic shocks. The Black Death, ravaging Europe from 1347 to 1351, killed up to half the population. Cities hollowed out, trade collapsed, and villages vanished. Yet the economic fallout was nuanced. With labor scarce, survivors demanded higher wages. Land and food, once rare, became abundant relative to people. Those with liquidity, silver, goods, or skills gained unprecedented leverage. Abandoned fields and homes were bought for pennies. This echoes the COVID-19 pandemic. Supply chains broke, governments printed trillions, and inequality surged. Those with cash snapped up properties and stocks, while others struggled. Crises always redistribute wealth. Those with reserves thrive, while those without suffer. Banking collapses reveal another truth. No institution is too big to fail. In the 1340s, Florence, Europe's financial hub, saw its mighty Bardi and Peruvi banks crumble after England's King Edward III defaulted on massive war loans. Depositors were ruined, trade stalled, and Florence plunged into chaos. Ordinary citizens learned that size doesn't equal safety. This lesson resurfaced in 2008 with Lehman Brothers and in 2009 when Lebanon's banks froze accounts. Institutions prioritize profit, not your security. When they fall, your savings go with them. The American Civil War offers another stark example. Both sides printed money to fund the fight. The Union's greenbacks, backed only by promises, fueled inflation as their value eroded. The Confederacy's graybacks were worse. By 1865, hyperinflation rendered them worthless. A soldier's pay couldn't buy bread. Savings vanished. Those with land, food, or gold survived, while others were left with useless paper. The lesson? Your own nation can face a currency collapse, and only tangible assets endure. France's 1790s revolution shows how quickly money can disintegrate. The assignats, paper notes supposedly backed by seized church lands, were printed relentlessly. Inflation soared, farmers rejected the notes, and bread riots erupted. Those holding food, silver, or property weathered the storm. Others were ruined. Trust in noble promises is worthless when no one accepts them. In 1997, Asia's financial crisis began with Thailand's baht collapsing under dollar-denominated debt. The contagion spread to Indonesia, Malaysia, and South Korea. Savings evaporated, debts ballooned, and jobs disappeared. Those with foreign assets or dollars fared better than those tied to local currencies. Debt in another's currency is a trap. When crisis hits, debtors drown. Lebanon's 2019 to 2021 banking collapse is a modern warning. Banks locked accounts, the Lebanese pound lost over 90% of its value, and lifetimes of savings vanished. Those with foreign accounts, gold, or cash outside the system survived. Others were trapped. Your bank balance is a loan to an institution that may not repay you in a crisis. So how do you protect yourself? History offers no universal fix, but patterns emerge. In Byzantium, gold was king. After the Black Death, liquidity bought land. In Florence, skepticism of banks saved wealth. In the Confederacy, hard goods held value. In France, food and property were currency. In Asia, avoiding foreign debt was key. In Lebanon, diversification was salvation. The constant? Survival hinges on recognizing fragility and holding what can't be printed away. Collapse is both tragedy and opportunity. The unprepared face ruin, but those with resilience, cash, skills, or real assets can seize wealth at bargain prices. After the Black Death, peasants became landowners. In 2008, cash-rich investors bought foreclosed homes. Survival also lies in utility. Bakers, farmers, and craftsmen thrive in crises because people always need food, tools, and trade. Money may fail, but production endures. Protection comes from real assets, real skills, and clear-eyed doubt. Every crisis transfers wealth from the trusting to the prepared, from paper to substance, from savers to builders. History doesn't just repeat, it warns. The question isn't if collapse comes, but whether you'll hold empty promises or something real when it does. If this perspective resonates, subscribe for more. History holds the answers. Let's uncover them together.